Welcome back for the weekly close and also the first day of December. There's 12 days of Christmas, but we got 25 days to get there. Seems like we're going to have a Santa rally all the way through if Jerome Powell has anything to say about it. But there are things rumbling outside of the United States that we should all be focusing on. It ain't all sunshine and rainbows. There are definitely rain clouds around us. We're going to get into all that and a lot more today on the episode of Money Never Sleeps. Welcome back to Money Never Sleeps. I appreciate having everyone here. Mr. House, thank you for being here. Before we get into anything, I just want to make sure everyone knows that we're not financial advisors. Nothing we say is financial advice. We're just a couple of guys who are absolutely just playing this market the way we see it, talking about it, and just anything that's important in the news that we think people should know about. We're going to discuss it here. Always consult your financial advisor if you got one of those, or just do some research before you make any decisions on your own. Protect your wealth right now. We're in a very scary time in this market. So do what you got to do to make sure that you're all well and good after the show and everything like that. So House, thank you for being here on Friday, first day of December. How are we doing today?
Doing good. Yeah, other than the drop in temperature, feeling pretty well and
Oh,
looking
dude,
forward to getting into it on today's show.
I am not a winter person at all. I'm already getting like just chills straight down my spine. I got like zero body fat on me too. So I'm just like blue in the lips when I go outside anymore.
Dude, I woke up at like 5 o'clock in the morning the other day, try and go to the gym early. I got outside and it was like 17 degrees. I just like shook my head, nope, walked back inside, went to bed for an extra hour.
Damn, man. Hopefully, I hope it's a mild winter. I don't know. It's an El Nino year, so we could be in for a lot of snow. Who knows? I don't think El Nino is going to have that much of an impact on the markets because I think the markets are pricing in what they want and they're not paying attention to anything but what Jerome Powell says and doing the exact opposite of that. So we got Jerome Powell talking today saying that, they feel they've gotten to a restrictive level in the markets, right? They feel like their policy hasn't necessarily been fully realized to the full effect of how much they've raised. However, they still see a future where they could potentially raise going forward. Markets said, fuck you, we're going to do what we want and we're going to keep rallying. But the reason why we're rallying is something that a lot of people don't realize. And I think we should take a look at that. There's two or three reasons why it's rallying today. I think number one is if we're just going to say base case, it's a trap, most likely. If you want to take that approach, because we have some other information later that we can take a look at, I think that's a pretty easy way for a lot of people to justify what's going on. If we look into this deeper, there's actually some data that we can take a look at. So I'm going to pull up the reverse repo, the overnights, and we talked about this a few days ago. And I think that this is something not necessarily a lot of people are talking about because they don't understand what's going on here. And this is pretty much showing you the overnight reverse repos. We can see that there's a lot of it slowly building up in 2021, which obviously is in the bull market. Everything was going up at that time. And by the time we get to, beginning of this year in January, right at the end of December, we see that we peaked out how much money was in the reverse repo. And slowly we have just been bleeding out until we start picking up recently. We started picking up significantly around September, and we are currently down from the height of it being at, what is that, 2.5 trillion. We're currently sitting somewhere around $768 billion worth of money still in the reverse repo. And the question that I think I have for you is, does this look normal here, dude? Look at this drop off from the past 2 days. So Wednesday, $914 billion. Today, $768 billion. This thing is bleeding like an open wound. What are your thoughts on this? Is this something that we should be keeping an eye on? Or is this something that, the markets will just find to be bullish somehow moving forward, even when this does drain?
I mean, I really don't think most people looking at markets are even paying attention to this because of how bullish they are. I think for the most part, they're like, why would we be looking at information like this? But with that being said, I definitely think it's something that people do need to keep in mind when liquidity is drying up this fast, and especially, this chart's very zoomed in and it's looking really down. You zoom out even further. I mean, liquidity is just plummeting at an astonishing rate. So I think it's definitely something people need to be watching out for.
Yeah, it's really concerning when you see something like this because, again, this is pretty much the last bit of liquidity that's out there. We know that the bank term funding program is ending in March. Hopefully, it ends in March. Yeah, we saw that it's. Let's just pull that up real quick too. I mean, we can see this here, but let's go to BTFP to pull it up. There it is. We're still making all-time highs on this thing. So clearly, liquidity is an issue because if the banks were solvent and the banks didn't have any problems with making pretty much any withdrawals, pretty much making the withdrawal process smooth, they wouldn't be this high. And we can see that we were recently at all-time highs. We're not there right now. We're just a little bit under it, but it shouldn't be this high going into the end of the program. We should honestly be decreasing this position that these banks have, but there's just a lot of liquidity that is currently still in the hands of these banks, and we're seeing that they're still continuing to stack cash, pulling from the reverse repo. It really does seem very suspicious that equities are rallying right here as this is going down, the reverse repo, not necessarily the bank term funding program, and that kind of tells me that maybe we're experiencing a bit of a blow off top, and that kind of fits in the narrative of a Santa rally, right? So I saw some really interesting stuff today. It looks like as of March, we're anticipating an 80% chance of a rate cut, which is absolutely wild to me. That from what Powell said today, which was very, very minimal. He just kind of went. I mean, he kind of played it safe, close to his collar. I don't know the fucking saying, but he pretty much didn't say too much, but at the same time played it both ways. So it's like, yeah, we're starting to see restrictive policy have its effect on the economy. However, it doesn't mean that we aren't away from potentially raising higher. And what's really interesting about that too is that now that we are seeing an 80% chance of rate cuts, people are anticipating that as a soft landing, that we're pivoting. I am saying that there's a lot of issues globally, and I forgot to say yesterday, but the euro, I think it was the euro area, came down to 2.1% inflation. If we get to that 2% inflation that the Fed has been, focused on, and the rates are still relatively high, there's a good chance that we're not going to see that 2%. We're probably going to go below that. And that's a scary thing, right? So that means that we're going to be in deflation territory if it goes negative. And if that's the case, then no one's going to be buying equities. It's going to be a mad dash for cash because unemployment is probably going to be rising significantly. And that's the other thing we wanted to talk about. If I'm going to pull up the initial claims and then also continued claims, but this is something that a lot of people aren't necessarily pricing in either, in my opinion. I think that if we're looking at the number of, I got to zoom in further for this. Obviously, unemployment hasn't been that high as of recent, but we can see that. Nope, too far, guys. All right, there we go. We take a look at this, we can see that initial claims is still relatively low. However, continued claims continues to go up, right? And if we know that continued claims continues to go up, that means that there's not enough jobs out there for people to find a new job after joining the initial claim. So that's continuing week over week. So that's continuing to climb. If continuing continues to climb, such a weird phrase that I have to say, initial is going to follow, just because that means that if there's no jobs and people start to get laid off, that means that they're going to be joining the continued claims as well. Initial claims are going to start mounting, and we're sitting somewhere where unemployment is going to start going north of 4% or so. So I think that we have a place right now where the market just wants to rally every chance it can get, because I think the amount of liquidity that's out there currently is just a mad dash trying to find and make as much as they possibly can. We know that this buyback window ends next week as unemployment comes out. So I think that we are sitting within 7 days or so before we start to see maybe this market kind of turn, or the narrative kind of shift in the market where we see a bit of a correction. But does the market, anticipate that this is going to be the end of it? I think they do. And that's not necessarily a good place. What are your thoughts on how people are positioning themselves right now? Because it seems like everyone right now, everyone and their mother at least, is bullish.
Yeah, I mean, I think the unemployment rate topic is always really interesting, because I think one thing that I don't know if it's that people don't realize or just that people don't forget, but the unemployment rate is people who are unemployed and looking for jobs. And in a time like now, something we've talked about, but it's hard to distinguish, is how many people that are employed are working multiple jobs, right? And how is that contributing to the jobs numbers? Um, and as we get closer to that 4%, and if we start even approaching 5% unemployment, that's kind of that stable number where things need to be to assume a sense of normalcy. So if we start breaking up towards 5 and getting higher, that's really going to be a negative sign for me.
Yeah, dude, I think you just hit the fucking nail on the head with that. I just pulled up the chart, multiple job holders, primary job full time and secondary job part time. Look at it. It's the highest it's ever been since recording of this data. So that's not necessarily a great sign. That shows you that the consumer is strapped for cash. They need to work multiple jobs to make ends meet,
Yeah.
right?
At the same time, though, it's kind of an interesting dilemma, right? Because we've seen, especially over the past few years, the gig economy has blown up.
Mhm.
And whether or not it's something that's, a need based job or just like, hey, I can work an extra 2 hours driving an Uber on the weekend and I can make, 60 or $80 in a high population density area. So I think that's one thing that'll definitely contribute to those numbers. But at the same time, there are definitely people that are driving Uber, doing DoorDash because inflation's going up, wages aren't rising to match with inflation, and it's like, hey, I want to provide for my family for Christmas, Thanksgiving, holiday season. Natural gas and energy bills going to start going up when it's getting cold. I mean, yeah. So I think it's going to be a really interesting next few weeks and months.
Oh, definitely. I think everyone's going in Santa Rally in mind. However, we are starting to see unemployment tick up even in between the time of Thanksgiving and when Christmas does happen. So I think 1,000 or so employees are being laid off from some steel company in Pennsylvania. There was also, I think it was TD Ameritrade or someone recently announced that they're going to be laying off 3,000 employees. So whether that's now or at the end of the year, it really remains to be seen. But I do think that there is this notion that everything's going to be okay going into the Christmas season. I necessarily think that things might be fine. I don't think we're going to get a Black Christmas, Black Swan events that takes us all the way down. But I do think things are going to mount for a lot of people who are already in a pretty difficult position. And that's one thing that we need to keep in mind. I also wanted to pull up this multiple jobs thing. This is percentage change from a year ago. It looks like that we're currently sitting in this month right now from actually we don't have November's yet, but we're at 11.89%. So year over year from October 2022 to 2023, it's 11.8% higher than it was the year prior, people holding multiple jobs. So just something really interesting to see. You did make a really good point about, energy costs and everything, because we did see that OPEC is cutting production. And that's going to be really interesting to see how the price reacts to that because it seems like the price was acting as if demand had dropped off a cliff when we look at oil. And it's actually really interesting as we speak right now. Let me pull this up. I wanted to take a look at this chart because I think that if we start to see oil's price drop down again, well, then I think we kind of know where we are heading in the global economy, right? So
Hmm.
this is the chart. I'm going to get rid of this 5 wave count that I have here, but we can see that it's moved down at 5 waves: wave one, wave two, wave three, wave four, wave five, and then we've had this ABC up here, and we got the news that they're cutting production. This is on the 4 hour. Let's go to the daily. We got the news that they were cutting production, and we had this wild day where oil went in both directions. I think that was on Wednesday. It went down, and then it came up, and then it was right around 77 or so. You can see that yesterday it went as high as $79, but today, wow, dropped right off a cliff, 74.28. Now we want to see how this plays out over the next few weeks. I think that's going to be really important. But at a time where there's a lot of travel, obviously crude oil is going to be huge. There's also going to be a lot of travel for not just vehicles like cars, but planes. It's travel season right now, the holidays. If this continues to go down, I mean, obviously gas price of gasoline is probably going to go down significantly. Is this just not telling us that there's no demand for a lot of these a lot of these commodities? Natural gas is down a little bit today. It's been dropping significantly recently. I think oil is no exception. I mean, let me just chart this real quick. Do you have anything to say on oil while I chart this?
No, not necessarily. I haven't really been paying as much attention to commodities as I was earlier in the year. Off the heels of the CZ and Binance announcement, I've really been kind of not necessarily charting out, but scouting out some plays, doing some more research into tokens that I've mentioned on the show, as well as just other tokens that I've been interested in. Because I do think while there's a chance, and I kind of am anticipating some pain or maybe some pullbacks in the crypto market, I do think we're starting to get to a point where, there's going to be a run up within next, let's say, 12, 18 months. And I'm going to start getting some DCAs in because I don't want to be sitting at my computer every minute of every day for the next 18 months. So I'm just trying to figure out, where I'm going to position myself.
Absolutely. Oh, my voice just cracked. Absolutely, man. I think that is probably the smartest thing to do. It's always weird, and people love to say just trade the charts in the moment. It's like you just work with what you're given. It's like, yeah, but sometimes it's easier just sitting back and letting the markets do what they're doing and just making those bets ahead of time when they're undervalued. It's doing the
Mm-hmm.
research, making those bets when no one was anticipating. Imagine if Mike Burry came out in 2006 and tried shorting the housing market. He wouldn't have got the deal. I mean, sure, he had to sit through a 50% drop in that portfolio for that first 2 years. But I mean, afterwards, what was he up 489% or something like that at the end, Scion's capital value? So I think it's really smart doing less, but also doing like educated research and just knowing what plays you're going to make when the market presents those opportunities.
Mm-hmm.
So I want to pull up oil one last thing so we can look at. I think there is a case where we could see oil drop into the 60s in the next month or so. I'm not saying it's going to happen overnight. I think that there is a chance that we could get another small little bounce. If I charted this correctly, this wave two, maybe we go back to 76 or right here, 76.95. Maybe not today, but maybe, next week we get 1 or 2 days up. But I do think that there is a pretty good drop coming if we're anticipating that global demand is coming to us to a halt. There's a lot of signs that it really is, and we'll talk about China in a moment. But this is what I'm seeing for oil. I think that we are going to see oil drop significantly, and at some point, it's even possible that we go, sub 50 for oil. I think it's very possible we could even. I'm not saying end up down here for the pandemic, but I think that's somewhere in between this range of maybe 35 to I'll be conservative. $35 to $57 a barrel for oil. It's a very possible range that we could be keeping an eye on. But this is another sign that demand is definitely weakening if we start seeing some of those handles in the 60s. So that's really interesting to see this oil. I think the OPEC thing is kind of a nothing burger for the time being. We're just gonna have to see how the market reacts to it. And if they're cutting production, that might even be a sign that they anticipate demand to be low, so they don't want to be holding more supply. So just something to keep in mind. Now, before we get into China, because I just want to run through this real quick, another sign that we are having problems in this market are the bond yields. Um, I know I'm talking about all the boring shit this week. It's not fun. Obviously I miss the days of crypto being, manipulated and me having a public enemy known as CZ. But right now, the bond yields are absolutely insane, and not just in the United States, but globally. And we take a look at this. These are the U.S. Treasuries this today. We can see that everything is down. It's I think the third or fourth day in a row where everything is down. So the bond market, I think, is positioning themselves, anticipating that liquidity is going to be an issue. They want to be in something risk off, something safe and guaranteed. And I think the treasuries are pretty much showing that by how much demand there is and given how bad it's been recently, right? They issued so many treasuries in the previous months where no one was absolutely taking them. Now we're seeing that there is bidders for, these bills. So I'm looking at this in the US. I'm like, okay, this makes sense. Maybe people are anticipating rate cuts. Maybe this is what they're trying to get ahead of. But then you look at the UK. UK is down all day today too. You look at Germany, down, not significantly, but it's still down comparative to the global market. And that tells me that people are definitely positioning themselves to be in a place where there is liquidity, or it's tied up in a place where they don't have to worry about it, depreciating in value. They're probably also taking advantage of the yields going up, or the yields being so high and anticipating that rates are probably going to get cut. So a lot of these percentages are going to go down. I think that this is definitely something where equities can be doing one thing, but then smart money is doing something completely different on the side. So this is something that really concerns me, and it kind of gives me not hope, but it gives me conviction that I'm betting big on the dollar right now. I'll pull up the DXY real quick and we look at some of the other currencies. DXY had a bad day today, thanks Jerome Powell, 100% just from people anticipating rate cuts. It's okay, we'll get back, but a lot of people are anticipating the dollar is going to break down from here, right? And it's very possible that it could. I think that it's very possible that it could just, black swan, or actually, I really don't think that's fucking possible. But it's just my conviction from everything I'm saying. Could we go down to the bottom of this parallel channel? Yeah, absolutely. I don't think that they're going to sacrifice the US dollar to save us from a recession. I think they'll sacrifice us to save the US dollar from devaluing. across the forex market. So that's what I'm betting on the dollar for that reason, because I think that's also been a tried and true test of what the U.S. government's willing to do. And I'm not making any commentary there. I just think that's probably what's going to happen. So we're seeing the bottom of this trend line on the DXY, bounced off, went up significantly. Maybe we get pulled back down here a little bit lower. It's very possible. Again, as long as we're within this parallel channel, I'm not sold on the idea that it's going to break down even further, like out of this channel. But as long as we're in the channel, I think that there is a good chance we're going to break out of this. Obviously, it's making lower highs and lower lows. Eventually, this is going to break out. Even this is a lower high as we talk right now. But I think that we're going to probably test this 105.661 once again. We're going to probably test the origin of this, which, I mean, if we're looking at this here, it's probably up higher now. It's probably like 108, 109. And could we push higher? I do think that there is a case we could see 114 to 117 for the DXY. Now, that is an absolutely crazy number. But if we look back in the history of recessions and times of absolute turmoil in the markets, we can see that the dollar does rally significantly in those moments. I'm just going to pull up, this is COVID right here. But, crashed significantly, and then it just rallied right after. So we can see this is a pretty good move up. It's about an almost 9% move to the upside from there. And if we put that to where we are currently, 9% to where we should be, that puts us roughly around 112. Now, again, that whole crisis was absolutely averted because of stimulus. Now the question is, we know there is a global liquidity issue. We know that banks are hoarding on U.S. dollars, and we know that there are countries like China that are in absolute turmoil. They're printing the yuan like crazy. Just because they're printing cash does not mean that there's going to be a huge pump in the markets. That just means that they're out of options. They're intervening every opportunity that they can to save their economy from absolute deflation. And if you've seen all these headlines that China keeps getting involved. Well, that shows you that there's a big problem there, because if a government has to get involved, there tends to be a huge, massive issue. So I think that if the yuan continues to print, and we're seeing the yuan devalue against the dollar, let's see it right here. It's up on the day, so we bounced off this line. There's a good chance that it can continue to go up, up here, which pretty much means that it's more expensive. The yuan is less valuable against the U.S. dollar. The U.S. dollar becomes more expensive for anyone trying to trade it in yuan, and eventually that means that we could break out of this. And this could be, this is actually a massive channel here. So let me just pull this up. Eventually we're probably going to test up here. You can even go higher if we really want to. Maybe we're just having the wrong pattern, but there's a good chance that we have plenty of room to the upside for the yuan to lose value against the US dollar. So I'm really interested to see how that plays out. We're also seeing the other currency, the euro, get rejected from this parallel channel. This should drop here. And then again, if it's losing its parity to the dollar, there's a good chance the dollar is going to rally against this. It's 100% a bear flag. Lost it, retested it, got rejected. Where are we? Right here, overbought on the monthly. It's just got to take some time. I don't know when it's going to happen, but I think December, January is going to be a pretty interesting month for a lot of forex currencies. Now, China, have you been keeping up with a lot of what's been going on over there?
Yeah, it looks like they're having a pretty pretty brutal scene right now. Looks like home prices, I think it's either 2 or 3 straight months they've risen. The stock market not doing well. I want to say there was like some sort of state institution got involved and got caught purchasing a bunch of equities to some extent. I'm not fully versed, but just nothing good coming out of there, right?
No, I was looking at, I think it's like Zhongyi, which is a shadow bank over there. Just flat out said we're insolvent. It's absolutely insane. The unsecured loans that they're giving to property builders, just so that they can start, generating, these banks need to loan out money in order to drive the economy forward, right? To pull them out of this kind of slowing down that they've seen post reopening. And it was a nice little bump that we got when they reopened. However, that slowly faltered out of nowhere, where the demand just dried up in that country. So I think China right now is going through something extremely difficult that no one is paying attention to, and is going to not just affect everything in Asia, between the Korean stock market, Japan is an absolute clusterfuck. I don't know what's going on over there in terms of the BOJ and their decision. Seems like there's a good chance that they're trying to do something with the yen, but every time they do it, it just loses its pair, and it's just killing their citizens 100%. But if something happens in China that absolutely has contagion globally, then we need to be concerned because China is the second largest economy in the world, if I'm not mistaken, right? They also I think they're the second holder or the first holder of US debt outside the US of, treasury bills. So, I mean, if they're going to be offloading any of that, it's really, or no, Japan is number two, right?
Yeah,
Think it's
I
Japan.
think Japan's number one holder, so they might be number two.
That's right. Yeah.
That's what
So
you're
yeah,
thinking
for
of.
foreign, exactly. So I mean, if they start offloading some of that stuff, I don't know. I think they're going to want U.S. dollars. I mean, you just printed trillions of dollars in yuan. I don't think that's going to help any of the issues that are. I mean, money hose isn't going to help it at this point. I think things need to break, and unfortunately, that's just sometimes that's what needs to be done. But I think there is definitely something that we should be keeping an eye on that going into the next year. Also, and there's a lot of concerns around RSV. If that comes to fruition, or that becomes some type of headline, that remains to be seen. But I definitely do think that there's a lot of stuff going on over there that just is not amounting to anything good coming here in the coming months. It's a lagging effect, and the stock market is 100% a lagging indicator. I mean, the German economy is almost in a depression right now. At least manufacturing is, but the DAX is up all-time highs right now. Like things like don't make sense sometimes, and it just takes time for things to play out, but eventually they do, and it just comes to liquidity, how much people are still able to circulate in the economy and in the markets. So that's pretty much everything that we had to talk about globally. Bunch of stuff, boring stuff.
So real quick, I found the two articles on China that I was trying to reference earlier. So one was from Bloomberg Markets, and it was an unidentified state institution in China tried to or did buy a bunch of ETFs, and that just sent massive waves through the market downward. And then the other article was from the Financial Times. And for the fourth straight month, international investors were net sellers of Chinese equity. So foreign money's flowing out. And it looks like China, like you were saying, they're trying to bail out the economy, investing in some ETFs, putting money back in. And people are like, oh, that's not good. That's fear right there.
Yeah, I saw that a lot of rich families in China are looking to other markets to potentially put money in. One of them is Japan. I think there's problems there. Japan. I'll say one thing only about Japan. SoftBank concerns me. I'll just leave it at that. I think there's a lot of things that you could be doing research on, but if you look at their market cap compared to how much they have percentage wise of the company ARM, those numbers are kind of scary. So definitely something that I think Japan has on their own hands. And I saw something somewhere where it was like, I think it was Japan has a ton of debt in Germany or something with Deutsche Bank where their derivatives are through them. So if the German economy does get to a point where, some of the banks start to see a lot of issues, I mean, Deutsche Bank's right there. And we also know that UBS definitely is having issues right now. They're saying that they're not, but they're still pretty much saying like, yeah, we're looking for a buyer kind of, but we think we'll be fine if not. And then we see that the second largest bank that's currently in Switzerland is also getting tanked this week. So I'm really interested to see what happens there. I think there is exposure, contagion between the two, but either side of the world, that could just blow up and just send ripples throughout the entire global economy. Yeah, so that's all I got on that stuff. I think we should get into the important stuff now, crypto. So I'm going to let you take away. What do you want to talk about first? I'm game because I have not been keeping up with crypto. I've been very much out of the fraud and the FUD.
Yeah, no, I mean, past few days it's been pretty volatile, but it's trying to hold an inch close the 40K mark on Bitcoin. We hit 39,000 earlier today, and then it came down a little bit, still holding around 38.7. So I'll be interested to see what happens there. ETH ripped up and followed after it, went up to just about 2,100. I think it broke to like maybe 2110, 2114, something like that. But yeah, I'm really, really curious to see where that goes. And then gaming tokens, man, they've just kept on running. There's been some pullbacks, but ultimately it's nothing major. And I think for the most part, there's still a lot of upward momentum going.
Let's do this. Let's end with Bitcoin and Ethereum. Let's talk about some of the gaming tokens because I know you were doing pretty well, and there's some wild stories that you've been telling me out of Shrap. I don't know what else you're into. I know your pool's doing pretty well right now. You lead the way on that. Just let me know what to look up, and I'll pull up the chart.
Yeah, so we'll just go with two. We'll start with Merit Circle and then we'll end with Strap. And I
What's the
believe
ticker
we've
on that one?
talked about both. Merit Circle is just MC, or it should, if you search Merit Circle, it should pop up.
There you go. Gotcha. MCUSD. Sweet.
Yeah, so Merit Circle's got a weird chart. It's not super heavily traded. So if you look at like that 1 hour or the 4 hour, there are a lot of gaps. But still, it's been on a run these past few months. I want to say it's up like 260, 270% since early October. But Merit Circle's interesting. They're a large DAO on Avalanche, and they have a subnet, and their main focus is just investing in and building out games that will all operate on the Merit Circle subnet, integrate the token in some way if they choose to have tokenomics. But they've been making a lot of progress. They just passed some big governance decisions to start using the Merit Circle token, I believe, as the gas token for the chain. So rather than using AVAX, people are going to be using MC, which would then potentially make it a deflationary token if it catches on and it really starts being used heavily. So that's pretty cool. They've got a bunch of games coming out, and a lot of those games have started to catch on. So that's something to pay attention to. Avalanche Gaming's been getting a bunch of hype. They've been marketing really well on Twitter, and it's always interesting to see that. Some big games coming on Avalanche, not necessarily on Merit Circle, but you've got Ember Sword. I believe you've got, what's it called? It's called Dead Drop by Dr. Disrespect, and then Midnight Society by 12 a.m. So some pretty big games. And then last but not least, and this will take us to our next token, we got Shrapnel.
Let's do it.
So Shrapnel's probably one of the most highly anticipated games that's integrating blockchain, not just this year, but I'd say ever. I mean, great dev team, raised a bunch of money in funding, but this week it came out that there's an internal lawsuit happening. So someone who became majority investor decided they wanted to stop issuing shares that were vesting to other people on the team and team members. And team didn't like that. So they decided to sue him and take him to court to get their shares issued. And the reason the investor supposedly didn't want to issue the shares were two reasons. One, it would make him no longer the majority shareholder and he wouldn't have controlling shares. The second part, and I don't have anything to verify this. This is all based off of what people have said on Twitter and what some of the team members of Shrapnel disclosed. The second part is that the investor is apparently $4.5 million in debt. So he's not wanting to issue shares so he can continue to give himself shares, sell those, and sell the token. I don't know if the token's even involved, to repay his debt. So Shrapnel team pretty much gave the high sign of, hey, beta build is complete for their beta coming up in December. Day-to-day operations aren't being affected. We're fighting this. We're confident in ourselves. And ultimately, I think it's, if what's been put out on Twitter and social media is what's actually happening, I think it's a no-brainer that Shrapnel's gonna get, the court's gonna force the investor to issue the shares. He's no longer going to be the majority investor, and the board and the remaining employees are probably going to do whatever they can to get him out of there and make sure he doesn't get controlling shares again. But with that being said, Shrapnel token launched at the beginning of November, less than a month. I mean, it's more than doubled in price. Do you wanna go through what you're seeing on the chart, Kevin?
I mean, I can't remember exactly what we were talking about. I thought I was looking at a 5-wave move possibly coming down from here. I think that's what it was. Eventually, there's a little bit of, let's go to the daily. I think the daily probably gives us a better look at that volume. Yeah, like if we're just looking at this here, obviously, as the price is coming down, and you're seeing the volume kind of pick up, probably means that we're going to see a bit of a pump, which we got to here. We're seeing the volumes decline here, though, as the price is going up. That does seem like a little bit bearish to me. And when it comes to this, I always ask you, because you're obviously more involved with a lot of these altcoins and stuff like that, these gaming tokens, to see how people necessarily are, if they're trading them, if they're using them. And I'm looking at this no different than any other altcoin, just because I think that eventually there is going to be a liquidity crisis. I'm not saying that this thing's not going to be big, and especially when it does roll out 100%.
Mm-hmm.
I think that there is going to be a pump, and we see these pumps all the time, right? I mean, just even look at this when the lawsuit came out, and then instead of rebounding, these are really good moves. I mean, it's 6.25%, this is 9.18%, 6.82%. If we look at this on the weekly, I'm interested to see it's probably down a little bit. Yeah, it's down 8.58%. But again, when there's like low liquidity, and what is the volume? 6.427 million this week. I don't have any more technicals on let's see, more technicals. Nope, that's not what I wanted. I don't have any more on terms of circulating supply or anything like that down there yet. But eventually, I think that there's a possibility that this could be part of a larger move. I don't necessarily know which direction to go here. I would say I'm looking at this just based off this move down here. I mean, it doesn't have to be an impulsive five-way. In fact, I can see something like this, something like a diagonal leading that way. But also, if this is a five-way move to the upside here, I mean, this could be just an ABC correction, right? Something like that. And then you could also potentially say that it's going up here. So I honestly think that this is going to break the way, whatever the altcoin market is doing right now. And I think the most important thing is to see how that's playing out. So I'm going to pull that up real quick. I think total 3, I haven't looked at that chart in so long, ever since Justin Sun and all those boys made the market do the wrong things. Yeah, I digress. But yeah, I mean, if we look at this on the daily, total 3, it's undervalued right now, but it's coiling up. It's in this triangle. And if we see this like this, I mean, that's probably going to break to the upside just looking at that there. If we look at this on the weekly, that's where it starts to get a little bit, a little bit shady. We're extremely overbought on the weekly. If we look at this on the monthly, hello, we're overbought already. So I think there is maybe room for a little bit more room to the upside. However, I do think that once we get to a certain point, we're going to start seeing a lot of resistance. I wouldn't be surprised if shrapnel sees the same type of resistance and we start to see that pull down. But I did have a question for you on this. I was wondering, what's your
Yeah.
strategy when you're playing, when you're trading this, or how you're going to play this move? Because again, I think it's really important for a lot of people who watch us to see how we're making some of these moves in the market. And I'm interested in seeing what's your medium, short, maybe even long-term play when it comes to shrapnel or even merit circle.
Yeah, so right now for Shrapnel, just because of how new the token is, and also that there hasn't been actual gameplay that's been widely available to the public, right now I'm mostly thinking about action in a short term and then brainstorming medium and long term around that. So, short term, we've got beta coming up for anyone who has an extraction pack or an operator. So that's going to be sometime in December, I believe. I don't think the date's officially confirmed. So, as far as short term, beta is going to be something that could impact token price. So token sinks are for in-game cosmetics, call signs, and a few other things that aren't announced. If the game's not good, no one's going to want to spend the token on stuff in the game. So then the token could go down. There aren't a lot of people who have played the game relative to some other games entering beta. Their alpha was held pretty close to the vest, and you had to be at in real life events or invited to play tests in person to go play them. So, footage has looked really good. If the beta impresses, I think that's definitely something that could drive people to go and buy the token. Really like the game, want to go buy a call sign, want to buy some cosmetics. Cool, I'm going to go buy some Shrap token. One thing that's interesting is their TGE event happened before the token went live for trading. So TGE is the token generation event, which is generally when the vesting schedule for a corporate token or a token like this that has a foundation behind it, investors behind it, is going to start vesting. So I believe the first unlock is going to be either in March or April. So that's something to watch for on the midterm, or in the mid-range kind of direction, because depending on who your investors are, if they're not playing the game and they're just looking for a return on their investment, they could just sell the whole chunk right as it vests, right? Now, with that being said, if the token's on a steady upward trajectory or it's holding well, the investor has a little bit more conviction and wants to double down. Maybe they keep the token, maybe they buy some more, maybe they DCA out and there's not a big effect. But and that goes to long term. Long term, the game just needs to be good. I think the first sign of that is beta, right? It needs to be a fun game. People need to enjoy playing it. And I think that sets the basis for syncs, right? The token syncs don't matter if no one's going to play the game. So long term is, I just want to have, a fun FPS shooter, the one that everyone's been clamoring for, and that Shrapnel looks to be the first team to deliver. At least
Definitely.
in blockchain, not just first one to deliver a fun FPS. There have been plenty of those before. I don't want people yelling at me saying there's never been a fun FPS before.
Yeah, man. Definitely interesting with Shrapnel. It's one that we have to keep an eye on. I do want it whenever you're on the show, take a look at this because, again, there is definitely opportunities out there if you're looking for them, maybe when other people aren't. And if there's going to be a fun FPS on blockchain, I mean, why the fuck not keep an eye on this? It seems like there's not always a ton of cool games that are out there. And, I think there's a lot of games back in 2021 which were they're just bunk games. They're just terrible. But it seems like a lot of them have picked up recently. I remember what was it? The one on Solana, was it not Stars Arena?
Star Atlas.
Star Atlas. That one was, everyone was talking about that. That was supposed to be huge. I haven't kept up with it. I haven't heard anything from them in such a long time.
I'm pretty sure I think it's finally coming out soon.
Really? That'd be sweet.
Yeah. And see, that's the thing, right? Is a lot of people got real turned off and faded the games from 2021 because people then hadn't built good games, right? It was just real low level stuff. And then they bought or thought they were investing in other games that take 2 to 3 years to build. So that's what's cool about Shrapnel, right? Is people have got into the ecosystem, been waiting for 2 years, and now we're finally at that point where from every piece of footage they've released and from the people that have played the alpha, looks and sounds like it's going to be real cool. So I'm excited.
Yeah, definitely. And again, I am very excited to see how the token itself performs going forward too. Let's look at Bitcoin. We can wrap it up here. We'll look at Bitcoin and ETH real quick. Nothing too crazy here. I think when we look at the Bitcoin chart, it's very boring, guys. I'm sorry. I didn't do this. I promise you, I did not manipulate the markets. I did not do that for anyone who's a Room fan. But looking at this right here, this is just distribution, in my opinion. This is 100% a bear flag that's just building distribution. It's going higher. It's pushing higher. We're up 2.9%, over $1,000 today. Is it going to go for 40K? It's very possible. Let's see how this smaller parallel channel is playing up here, because, I mean, we could say, oh, yeah, we're going to 40K, but we only get to 39.7, right? And then we start to get rejection. This should break at some point. I do anticipate a retest of the origin, which is roughly around here at 33,275. It's really interesting right now when I look at crypto and I look at tradfi, because I do anticipate both downward pressure significantly for both. It's hard to say that and not be ridiculed because the market's been going up nonstop. That's something that's really interesting. And I think a lot of people are also discounting the fact that whenever the Fed does pivot, we start to see, the markets kind of reverse, and, we start to see a bit of a sell-off, significant sell-off. And in the moment, I think a lot of people are just saying that'll never happen, that we're just going up forever because they'll start printing money again. It's like, well, we're right back in the same problem once again. So when I'm looking at this here, I'm anticipating downward pressure. Do I think it happens before, traditional finance comes down? Maybe, but I don't think it's too far away in terms of days in which you start to see both become an issue. Because if liquidity bleeds from one sector of financial markets, it's going to definitely bleed from others, right? Let's not forget that there are a lot of banks that do have a lot of exposure to crypto still. I mean, just looking at Axos Bank, that bank was 100% just funneling money with Binance. The CEO was selling off shares like crazy all summer, and now it's like, oh, nothing to be said about that. But there's a lot of banks that had exposure to crypto, and I mean, just a lot of hedge funds too. Let's not discount the fact that the ETFs are coming eventually. How many people are definitely up, loading up on Bitcoin, MicroStrategy, right? possibly some of the worst DCing I've ever seen in my life. Jokes aside, this is not a bullish structure in either way. Like even on the short time frame, like okay, maybe on the like the 5 minute, yeah, sure, we can get to 39, 7, 40K. But on the 4 hourly, this looks like distribution and a bear flag, right? And we don't have a lot, we have a lot of gaps down here. We see that we're extremely overbought on the hourly. We're at 99 and 95 or 97, my bad. Let's pull this up on the daily. Yeah, once again, it's the same structure. Yeah, we have some room on the stochastic RSI, but this is moving up pretty quick, right? I anticipate 6 p.m., Central Standard Time, 7 o'clock Eastern Time tonight. We're going to see this thing just move up once again. If it shot up 37 to 53, I wouldn't be surprised for like 65 or north of that on the stochastic RSI, kissing this upper trend line up here. Let me see if I can make this a little bit bigger so it's easier to see. Change this to white. There we go. Yeah, hitting up here, I think that we're going to be finding ourselves very soon. Doesn't mean that it can't keep pushing up. I mean, it seems like this is going to be a strong level of resistance for us moving forward. And if we zoom out even further, we're in another parallel channel going to the upside, and it just has not broken yet. We haven't tested that bottom level, and it's been going on for a significant period of time. And if it's been going on this long, I do anticipate us to test the bottom of this origin, which roughly puts us around 14 to 12.5K. It's hard to say that, but if you look at the monthly and the weekly is extremely overbought. It's at 100 and 100. It's the most overbought that it can possibly be. If we look at the monthly, we're at 190. And we just got the new monthly open, last night. It's a perfect three-way move after a five-way move down. So I anticipate another 5 waves to finish off this ABC structure that is Bitcoin. It's not fun. It's not pleasant because it's played out from November 2021 to November 2022 to where we are right now, December 2023. And, I think we can honestly bottom a lot faster than people anticipate. I mean, I'm not going to say we're going to be out here in December 2024, but I do think it's possible that we could be here, I don't know, June next year. We could see something like that happen if things start to go south. So again, reverse repo, there's a lot of stuff that are just really adding up that seems really bearish for this on the macro and even on the shorter time frame. So I do think that we are on borrowed time. If you're able to get any gains in, all the power to you. I'm happy for you. But when I look at this, volumes are dying, prices pushing up. I just can't get behind this bullish move to the upside. And even looking here, I mean, this is the Bitcoin dominance. It's climbing up again. So eventually, we're probably going to be seeing something very similar to where we once were. We were concerned that 57 was going to be the next target. I'm seeing a structure that's above the 50 moving average. If it on the monthly, I think it can stay overbought. I think it can also move up really fast from here. On the daily, sure, we're overbought, but we're above the 50 and the 200 once again. If we look at the weekly, we got plenty of room to go to the upside, and we're probably going to get a golden cross here with a 50 cross to the 200. That's a bullish move. We're probably going to see 57% Bitcoin dominance. What does that mean? It means alts are probably going to bleed out a bit, or we're going to see capital roll into Bitcoin, and that's going to mean alts also bleed out. To close up here with ETH, same exact structure on the macro. Nothing's changed. Extremely overbought. There are no volumes. Volumes are dead down here. This is really concerning, in my opinion. We saw that we rallied out of this death cross. I think we're going to start finding resistance. We hit resistance here twice in April. We hit it a couple of times already here in November. I think that the move is fading. Doesn't mean that we can't go above it real quick in a wick, but I think that we are going to start closing below this line significantly. If we look at the monthly, I mean, it's 3 times a month has hit this recently, and we found that this was support in the past. Now it's resistance. Volumes are down. This looks like it's going to break, and we're probably going to have to test the bottom of this trend line. Does that mean that ETH's probably going to see, if we're going to go down the next level, probably 1660? I think that's a good target to be keeping an eye on. If that holds, then good. Maybe we keep going up further. If it doesn't hold, you're looking at, I mean, I hate to say it on the monthly, but you're looking at like $900 for ETH. So it's just some big picture things that we need to keep an eye on. The structures are the same. They're not bullish for the short term. I mean, it's for the medium to long term. Maybe on the shorter time frames, you're able to get a trade here and there. But I think that, once again, we are in borrowed time, and we know that liquidity is going to be an issue once we get into Q1 of next year. So that's all I got on crypto fronts. I'm not even going to look at Binance anymore. I don't care about that. And I don't think people should care about that too much. We know that they have 76% of all circulating supply. So anything that does go down first, it's likely going to be what retail is dumping on them. So that's it. Any last words, man? That's all I got to say. I got a headache right now.
Yeah, I mean, I'll just go ahead and say I love that ETH is nearing 2100 because, I've got ETH, but I think I'd love it even more if it went down to 900 because then I could have even more ETH. So it's all about perspective.
Definitely. Oh, dude, you bring up ETH and then make me think of something that's almost equally the same value and price. Now I got to look it up real quick. Gold, the most boring, the old man's asset. Gold. There's the kids, Gen Z would say the boomer shitcoin. If we look at this here, this is where is it? There's gold, you son of a bitch. I mean, we're so close to hitting all-time highs, and it's a quad top, right? 1, 2, 3, 4. Guys, this is extremely overbought on the monthly. I mean, December, it's going to be overbought on the monthly. I don't care what anyone says. Even if it goes down from here, it's going to be overbought. Daily, nice and overbought. Weekly, I mean, you're right there once again. And I keep saying this, in times of uncertainty, that's when gold ticks up. I don't think that the markets are saying risk off here. I think they're just not sure how much further this move to the upside can actually go. And that's what I think we're seeing with gold. Like, once again, July 2020, obviously we just got out of the pandemic. Gold starts ticking up into that because people aren't sure what's going to happen. Are we going to get another dip like we just saw? Value goes up, right? And then once we started seeing that the stocks started rising, there's the dip in gold. Once again, here, March 2022, people were afraid of inflation, starts dipping again. Rallies into May 2023, Signature, First Republic, all those banks, they want to see how the markets react, starts dipping as equities go up. Here we are. Nothing really too crazy has happened. Maybe a few debt ceiling crisis averted, but we're right here at the top once again. Is there enough to push us over the top into the new all-time highs? I think so, but just not in this move necessarily. We'll have to keep an eye on that. But for a perspective why I think that, if we look back at 2008, we had this really good dip in 2008. It came up here, dipped, and then we saw that for roughly 3 years or so. It pretty much just rallied to the all-time high. Doesn't mean that we can't have a good dip down here and then we rally to the all-time high post whatever recession crash we want to talk about. And eventually that just means that people are uncertain about the market moving forward after we hit the market bottom. So that's what I'm seeing with gold. I think we are going to hit that quad top, maybe go a little bit higher than that to get people excited, but I don't necessarily think that this is going to be a big move. I think that one thing we need to keep an eye on are the currencies. I think the dollar is still showing pretty good strength despite, dumping today. And I think that goes the same globally.
I'm glad you brought up gold because I had to do some quick research right after you brought it up and confirm. Honestly, one of the best trades you could have made for stability and gains in the past 2 months. You went to Costco and bought those gold bars, even online, right? I mean, since they started selling gold in stores, it looks like in the beginning of October, like October 1st or into September. That was the local bottom.
It was
gold in the past few months, like
the
right
Costco
when it
pump.
hit like 1800-ish. Yeah, and it was in September. I want to say it went. Did it go? Yeah, it was around the first few days of October. You bought gold around 1815. You got a bunch of those bars. I mean, they were selling out. I heard
Yeah, they did
near
sell out.
2100.
I don't know, man. It's I mean, I think it's a fool's rally if we're thinking about this going up
boomer
crazy.
shit coin.
It's the boomer shit coin, dude. I love that. We should get t-shirts that say M&S. We are shorting the boomer shit coin. Now, I think gold's going to go up in value, just not right now. I think I'm just using historical patterns to see when it does move. It's always post crashes. I think that's just a play right now. I think, again, I can talk about it. It's no different than any other commodity or asset. It's only worth as much as the next guy is willing to pay. And for demand for everyone across the entire globe right now, I don't necessarily think gold is the answer. Maybe short term. I think what they're going to really want soon to pay off a lot of that debt's going to be cash and US dollars specifically. And it doesn't matter if we're going into the deflationary period. We know that the banks are not lending like they once were. That means that they're not creating credit or cash on hand to enter the system. That means that debts are being paid off, and there's just less money circulating in the economy. So that's the one thing we need to keep an eye on. Gold, you did it. You had the Costco rally. It's fucking amazing. Now for the rest of December, I don't know. I think one more week. Everyone just bear one more week, and then I think we start to see maybe the narrative shift a little bit. We start to see the prices change. Seems like it's going up forever, but that buyback window is playing a bigger effect than I think most people are giving it credit for. Once that closes, it's almost the same thing as Robinhood turning off the buy button on GameStop. That's just my opinion. That's my analogy. Eventually, people are going to chase the gains to the downside. CTAs are just positioned to chase this fucking rally into the end of the year, but we'll see. I think that's a mouthful and what we're anticipating moving forward. So I think we'll leave it there. Got nothing else to say. Final thoughts. Good luck. Have a good weekend, everyone. Don't get too crazy. Where you have plenty of market left, and it's going to be interesting weeks ahead. So, House, thank you for being here always. Glad to have you. Got to have you on here more. You're the man when it comes to gaming tokens and pretty much finding value where no one else is looking. We're going to look forward to seeing you guys Monday. J-Web should be back, and we hope you all have a great weekend and take care.